Welcome to the new financial year and the latest newsletter from Cullen Private Wealth. A few things have happened since the last newsletter. Firstly, the Brexit shock exit position for Britain. I think the important thing to remember about this is that the whole Brexit thing still hasn't been triggered yet, and once it is triggered, which could happen in the next few months, the exit from the euro area is then 2 years away. So it's going to be a managed process. There's not going to be any great shocks through that period. I think the shock was the actual vote. Britain is not the only area in Europe that is not part of the EU, so they'll simply go along and be a part of Europe but not part of the EU, much like the other existing countries are that aren't part of the EU. Interestingly, the people that voted for the Brexit probably had immigration as a fairly high point on why they chose to make the exit so that Britain could control its borders. The remaining countries that are not part of the EU but within Europe, as part of the trade benefits of being aligned, don't have control of their borders, so they may still not get everything they voted for. So the outcome is going to be a bit of a mixed bag, I think, for Britain. It may also trigger the breakup of Britain itself. Scotland could go off, Northern Ireland could go off, so it'll be an interesting outcome. It's unlikely to trigger a mass exodus of other nations from the EU, and the reason for that is that I think the pain that Britain's gone through, the devaluation of their currency, the possibility of them going into recession has probably made the other countries think twice about the possibility of following suit. Moving on to the Australian election, we've finally got a result from that very long election campaign and vote. There's a narrow win to the Liberal Party. The Senate looks as though it's going to be as disjointed as it was the last time around. So the outcome of all of that is that we're probably going to find that not a lot changes and happens over the next 3 years. Trying to get legislation through the Senate is going to be difficult, so we can probably assume that on most issues there's going to be a bit of status quo for a few years to come yet. The budget still hasn't been passed, so that's going to have to go through and fight its way through the Senate. The super changes that were announced in the May budget are probably going to be watered down by the Liberals, and then again they're still going to have to get through the Senate. So what the final outcome will be there, who knows, but it'll be something like, I assume, what was announced in the budget without necessarily getting everything through. I think the ability to contribute more than the 500,000 lifetime limit is probably going to be changed quite a bit before we see the final makeup of that. The market over this period has been largely range bound. We saw a big drop when the Brexit vote came because it was a shock to the market. The market's pretty much recovered most of that drop, so it's now just been really trading in a range for 12-18 months, and hopefully it'll eventually start to kick higher. I think it looks reasonably priced at the moment, actually a bit attractive. We're probably going to see another rate cut coming in the next month or two from the Reserve in Australia. If we look at the alternative investment options within Australia, cash and fixed interest and property, none of them look too attractive at the moment, so I think equities are looking pretty good at these levels. That's about it for this update. I look forward to presenting in a couple of months' time.